Welcome. Thanks for joining us tonight. We're gonna give people a couple more minutes to show up and we'll get started soon.
Hi, Deborah.
Hi, Judy.
Hi, nice to see you.
Nice to see you after all for emailing, right?
Well, the bill was introduced.
It was finally introduced.
Yay, yay. And what is the prognosis from the people who know?
Well, I'll definitely be giving an update about that. I mean, this is going to be a really tough one. However,
why? It seems self-obvious.
I know, Judy, I know. And for those, we're talking about the para bill that has been introduced, which we'll be talking about tonight, that's calling on para to divest from fossil fuels. But yes, I agree. It's something I consistently marvel at, just all the layers of politics and we're making progress. We've got a really great team of people who will testify, and we are getting this issue fully recognized at the state. So
yay, yay.
Anyway, nice to see you, and welcome
exciting.
Everyone.
Good work.
Thank you.
Yeah.
And
Hi, this is Amy.
I heard great testimony from Gazelle and Ron and Ramesh today on the DSM. You guys did a great job. It was a fantastic turnout.
Great. Yeah, unfortunately, the bill got laid over for amendments. I hope they don't amend it to death, but the utilities and the labor people were out in force wanting amendments. So,
what is DSM?
Demand side management. Way to reduce energy use, and there are some technical issues as to how that is done, and this bill would have made it easier to have demand side management programs.
Excellent.
But the utilities and labor people have some issues with it, and I'm still hoping that it'll get through. I'm just worried that it might be amended to death. One of the notable things about the bill is that it has the social cost of carbon and methane in it.
Excellent.
So that's good. But anyway, I don't want to hijack the proceedings.
No, not at all. And I wanted to say, I heard from the lobbyist for that bill, Becky Long, that it was expected for the bill to be laid over and not to be alarmed, that everything should be moving as planned, and it's looking good. That's what I was told last night anyway, so. Anyway, Devin, I'll hand it over to you.
All right, well, welcome to our monthly BoCo Boulder County 350 meeting. I'm Devin. I am part of the leadership team of the BoCo group, and I'm really excited tonight because we're going to be talking about climate finance, and we have a statewide campaign that you just heard about going on, that has been going on and continues to go on around the state pension fund. So Deb's going to talk about that and give an update on the campaign and what you all can do to help us out with that. And I'm going to start with just some background yes, Judy, as you said, it seems like this should all be really obvious and easy. So I'm going to talk a little bit about the financial industry and how it is dealing with climate change and why it's such a struggle to get the kinds of results that we want. So I guess I'm introducing myself. I am a PhD student at CU Boulder in my spare time, and I study climate finance In particular, I'm looking at big divestments, big banks that are divesting from fossil fuels and why they're doing it. So I have been digging into this financial world, and it is so complicated. There are so many layers and curtains to hide behind. And so I really hope to demystify a little bit tonight and share some of the results of the digging that I've been doing. So
What's your PhD thesis on?
it's on big banks divesting from fossil fuels.
Oh,
The
wow.
Norwegian sovereign fund, other sovereign funds, national banks that have been doing this work. So yeah.
Your shoulders must be getting calloused holding, I mean, you're doing important work.
Well, the calluses help me bear more weight in the future, right? That's what it's for. All right, so climate finance. I titled this climate finance so you'd know what it is, but the really real thing I wanted to title is what is happening right now, because there are like lots of headlines and news pieces that are coming through about individual groups making commitments around climate change. Every company has a goal now. Everyone's claiming to be in accordance with the Paris Accords. So what is really happening? How has anyone heard of this latest event? Raise your hands so I can see you. About BlackRock saying that they're gonna put climate at the center of their investment strategies. Okay, cool. So some of you have, some of you haven't. This is like everyone's in the financial world, everyone's talking about this because BlackRock is the largest asset manager in the world. They manage $7 trillion. It's huge. And their CEO, Larry Fink, put out a letter at the beginning of the year saying that he's going to make climate change central to their investment decisions. Okay. And everyone wants to know, what does this really mean? What is BlackRock doing? Why does this matter? And it's just because part of it is just that they're big. And BlackRock basically owns a good portion of every large company that you can imagine.
Wow.
And so they have influence over those companies. They could easily sell off, I don't know the exact numbers, but like 3% of the largest property management company in the world. 3% of that company they could put on sale at one time. That's critical mass, okay? So when we talk about divestment, when we talk about finance, critical mass really matters. If you have in the stock market someone selling a few shares here and there, it doesn't affect share price hardly at all because there's someone else ready to jump in and buy up those shares right behind them, right? So you need a large number of banks essentially engaging in a boycott, a divestment, in order to have any impact. I mean, the numbers on this are so large, like the fossil fuel industry itself globally is valued at around $7 trillion, okay? And so there's just so much money. I like to give the example of the Norwegian sovereign fund, which divested from fossil fuels. That's a $3 trillion fund. They took out $13 billion and it didn't affect share prices at all. Okay, so we're just talking massive sums, and BlackRock has those sums. So that's why this is a big deal. And they're an industry influencer, so they can affect the people around them. Just some other news, like all of this is coming after over a decade of financial campaigning from the climate movement that has been really successful. And so just a few other things that have been going on. 100 globally significant banks and insurers and other institutions have now committed to divesting from coal, and that's banks or institutions with more than $10 billion under management. So that's a number that is growing exponentially. There are international collaborations. This one is one that I'm studying, the One Planet collaborations. Started with sovereign wealth funds. They've moved on to private banks and private equity managers now, and they've got a third of the world's assets in their partnership now. BlackRock's involved. Every big bank that you can think of is involved, and they have an explicit policy that if you are going to join in their collaboration, you not only have to take climate risks into account in your investing, but you also have to advocate for other banks and other institutions to get involved in climate risk assessment. So the really amazing thing about this is it started in 2016, 2017, and with 6 sovereign wealth funds, and now it has a third of the world's assets. So it has, I think 50 different banks and insurers are now involved with them. So their strategy of, influencing through advocacy, influencing their peers seems to be really working. And then we have here on the home front, President Biden has signaled that he's going to put out an executive order requiring corporations and investors to report on climate risks, and has also promised tax policies that are in alignment with the Paris Accords. So we don't know exactly what that's going to look like, but these are just some of the successes and momentum that are going on around this right now, that I think show the success of the climate movement that has been working on this for so long. I can't see my time, so if I'm running over, will you all let me know? So back to BlackRock, and I want to talk about BlackRock because they're a good case study, basically. They are pretty representative of what the industry is up to right now. So what are they actually doing? What does their commitment actually mean? They're divesting from any company that has more than 25% of their revenue coming from thermal coal. Now, that sounds good. That's going to get rid of like your worst offenders in terms of companies that are purely coal companies. But then it means like utilities and energy companies that have less than 25% of their revenue coming from coal, but may still have massive amounts of coal that they're exploiting and burning, et cetera. They're not going to be taking their money out of that. So there are some loopholes here. And the other loophole is that this only applies to BlackRock's actively managed funds, which is about 25% of all their funds. So not all of their funds by any means. And what that means is those are the funds that they have a manager who's actually like buying and selling stocks on a regular basis. Passively managed funds are they just buy the same stocks as some index fund that is known to be operating well. So this is often like the S&P 500, which is run through Vanguard. I'm getting a little in the weeds here, but basically BlackRock doesn't control what they buy. They just follow someone else's lead on those. So you have 75% of their money is actually not being divested. So is this a divestment? I don't know. Okay. The other thing they're doing that they promise to do is engage with fossil fuel companies and threaten divestment. So they've said to, say, a company like Shell or Exxon, they are having meetings with them and telling them that those companies need to be seriously thinking about climate risks, seriously thinking about transitioning off of fossil fuels. And if they're not, then BlackRock will take their money out of those companies. And this has been shown to have an impact. It's also nice for BlackRock because they don't have to lose their profits from those funds. So they're kind of two sides to that coin. In the last year, since the divestment from coal, BlackRock has also voted against climate-friendly shareholder resolutions. So a really well-known example is with Shell. There was a shareholder resolution where the shareholders at Shell brought something up for a vote that would have required Shell to set Paris Accord guided targets for fossil fuel reduction. And BlackRock voted against it. This was, having said that they're going to consider climate change. And their reasoning was that Shell's current goal, which is to get to net zero by 2050, is sufficient.
Bullshit.
You said it, so I don't have to. And there are no intermediate steps that have been defined by Shell. So this is kind of what you're going to see with climate finance, is that, yes, there are considerations being made. Excuse me. People are thinking about it, but you're not going to see like really ambitious climate goals coming out of this yet.
It's a stalling tactic.
In some cases, almost certainly. In others, yeah, it's hard to say. I would say that, yeah, I think that's a lot of what's going on. It's not the only thing that's going on, but it's a fair amount of it. And it's also, I mean, the money still comes first, right? That's still, making money is still the priority. And so as long as that's the case, this is going to be a secondary consideration. And there's no motivation to improve your goals if basically people are happy with you making money for them. And the final thing that BlackRock is doing is they're basing all their advocacy on the Task Force for Climate-Related Financial Disclosures, the TCFD. Okay, and this is where I'm saying, like, there are so many layers to this. So it sounds really great. Like, TCFD is supposed to be best practice for the industry. They're run by Bloomberg. Bloomberg's the chairman of the TCFD. And, you know, he's going around talking about what a great climate champion he is. So this is a framework that provides guidance to companies who want to disclose climate-related information. It doesn't specify that companies have to create science-related targets or really targets of any kind. It endorses net zero paradigms. So the idea that we could just, you know, plant trees over there and it'll be fine for the environment. And the focus is on transparency. So the idea is, as long as we're telling you how many fossil fuels we're emitting, we're living up to the expectations.
Oh, gee.
Best practice in the industry. So this is what people mean when they say, like, when the para, we'll get into this, but when para's managers say, we are meeting best practice industry standards, like, this is what we're talking about. We're talking about they're telling people what fossil fuels they're burning. And that's what's expected. And the other thing is, it's really a focus on financial risk from climate change. So when you hear financial people talk about risk, they're not talking about the risk of people dying or the risk of people losing their homes to flooding or the risk of destabilizing the entire climate through human activity. They're talking about what those things mean for their money-making ability. And this is really important because it means that we are often talking at cross purposes about risk with financial people. When a climate advocate like me says risk, I mean those ethical, moral, like world
Existential.
possibilities. Yeah, existential, that's the word I was looking for. When they talk about risk, they're saying, well, if the climate isn't stable, then we're not going to be able to invest in, say, developing markets in Brazil because those markets will crash due to climate issues. And so we won't be able to make money long term. And it's so removed from the actual climate issue. And the other thing is, they have a sense of acceptable risk, right? Whereas long as, like, risk is something you take on in order to make money. And usually the more risk there is, the more money there is to be made. And it means that you could also lose a lot of money. But there's this different idea of what it means to take risk. And so having a certain amount of risk, climate-related risk, is completely acceptable, right? So in the short term, if in the short term, you are going to make money over the next 10 years off of funding fossil fuel companies, that's fine, because 10 years from now, you can sell off your stocks. And when the industry has fully crashed, you can move on to the next industry, right? So the only real reason that I see that companies are paying attention to climate change is because they're worried that that crash is coming or may have already happened. But they're worried the fossil fuel industry is not going to be viable for long. And so I think that's part of why you've seen all of these recent headlines, et cetera, about various companies taking on new climate goals, various banks taking on new climate goals, because Biden is threatening regulation. And regulation is the absolute bane of all companies. They hate it. They don't want it. They want to do all of this voluntarily so that they can delay the really hard decisions so that they can do the minimal possible. And so that brings me, I did want to mention before I get on to next steps, there are some funds out there who's they're leading the field, and you should, if you're interested, I get a lot of questions from folks about like, where should I put my money? So if you're interested in investments that are more ethical, that don't invest in fossil fuels, there are some long-time responsible investing companies that have fossil-free funds, and just be aware that there may be trade-offs. So for instance, Calvert is really well known in the industry. Sorry. They have a fund that is fossil-free, but then they have a bad rating for weapons, for producing
Right.
right? So it's just, I looked at Parnassus. They have a fund that's better rated across the board, but it's like, it's very challenging. Basically, to me, it means capitalism is corrupt and doesn't work. But it's very challenging in the current economic system to invest in a way that doesn't screw somebody over. But yeah, this website, I'll send you all the slides at the end of this so you can have my links and check out this website, because it is really helpful at sorting through some of the more dense information. So what's next? So for the divestment movement, for the climate movement, we need to keep pressure on those mainstream investors. So as we have all of these commitments coming in, it's really important for us to like dive into the depths of them, figure out through all those curtains what's really being said, what companies are really making change, and what companies are greenwashing. The coal divestment is basically, people are adopting that now. We're seeing like, if BlackRock is doing it, then everyone's going to be doing it soon. So it really is time to like demand divestment from all fossil fuels. And I think probably I'm not telling you all much that you don't know there, but in terms of strategy as well, I don't think we need to back off and focus on coal anymore. It's going to be a done deal anytime in the next few years. And then I think the other thing we need to be demanding is for companies and investors to be setting science-based targets with intermediary steps. So the same things that we're demanding of our legislation, our legislative bodies, our governments, we need to be asking the same of companies, that they commit to real targets, not this net zero BS, but real targets, short-term targets of reducing their fossil fuel emissions in the next few years. And then the other thing is, another way to start upping the asks is through the divest, reinvest idea or framework, which is 350 just published something on this in the last week or so. And the idea is, yeah, it's great to move your money out of fossil fuels, but if you move it into weapons, you're not helping anything, right? So thinking more about those trade-offs and thinking about ways to invest in local community goods, in projects that have real social good attached to them and aren't just about making money. And yeah, we probably will see the profit margins decrease to some degree, but we'll also see the fossil fuel margins decrease. And this is about justice as well. I think investing for justice is kind of the next frontier. And is that possible? We need to start asking financial professionals to deal with that question and consider whether we can maintain any sort of economy like what we have right now. For responsible investment leaders, I would say the same thing, like those trade-offs between fossil fuels and weapons, fossil fuels and child labor, we cannot have that. That can't be acceptable. And so we need to see those sort of investment leaders taking a more holistic view of the way that they're investing, and not just investing to please consumer A, who cares about climate change, and consumer B, who cares about world peace, but combining those so that you actually have a just impact on the world. And then regulation. I mean, we're in this paradigm where people think that regulating markets means that you will destroy their essential function, which if markets are functioning the way they should right now, then I think that should be destroyed. But also regulation, I think, is the only way that you're gonna really get companies to take real action. Consumers are easy enough to fool with a nice, pretty report. I mean, like I read these reports all the time, and still sometimes it takes, I'm reading a goal and I'm so excited, and I have to look at 3 other reports to understand the data behind it to know that it is a greenwashing BS goal. And so it's just too easy for companies to write something pretty and move on and convince everyone that they've done enough. And so I think we really need to be pushing the government to regulate the financial industry around climate change, not just regulate carbon, but regulate the way that investment works and what's allowed. So with all of that, I think I'm going to pass it off to Deb, and she's going to talk about our current bill, which is doing this right here, divesting from fossil fuels.
Thanks, Devin. And actually, I feel like you just covered so much, and which is fantastic. Yeah, let's pause, and just in case anyone has any questions, because we have plenty of time. My presentation is very short, and we want to make sure we're getting to questions too. So Paul, were you raising your hand?
Yeah, I thank you, Devin, very much. This is great work you're doing. It's like the coal industry is the weak sister of the fossil fuels. There's already coal companies going bankrupt, and it's no place anybody want to put their money anymore. But there was no mention of them divesting gas and oil. The oil and gas is just going strong, and I just think these people figure as long as they stick together, they can keep it going. It's greenwashing. As you said, it's greenwashing. That's my opinion.
Yeah, I mean, the strategy around fossil fuel companies, I mean, the idea is that Exxon, Shell, etc., are all supposedly transitioning to being green energy companies, that they've always been energy companies, not fossil fuel companies. That's what they are. That's their narrative now, right? And so BlackRock or any of these banks as shareholders can push these companies further to convince them to make these changes. And the threat of divestment is actually more powerful than boycotting, which I think is true to some, like, we know, we're campaigners here. We know that the threat can be enough to cause change. But if you've been ignored long enough, then you have to actually act on the boycott. And I'm not sure how many of these companies or banks are actually willing to divest, even though they say publicly that they are.
Yeah, it would be great to get out the information about personal divestment. Where should I take my money out of my Vanguard S&P 500 fund and put it somewhere else where it do more good?
Yeah, check out that when we send the slides, check out that link for fossil-free funds, because that does have some funds that are specifically have no investments in fossil fuels. And the other thing is, I mean, Micah knows more about this, but we've been talking about public banking in 350 Colorado for a long time. And also, credit unions are local investors who are generally better as well.
Yeah. Okay, thanks.
Does anyone else have questions or comments? Go ahead, Ron.
Hi, Devin, thanks. Aren't a lot of these net zero goals that they're setting based on like really optimistic assumptions about sort of future technology of, carbon sequestration, or they're going to plant trees everywhere? It seems like they've made a lot of assumptions about the offsets.
Yeah, I mean, I think it's interesting because we've seen, like, there are companies that I've been studying that have been claiming to be net carbon neutral for the last 5 to 10 years. And yet you're seeing their carbon outputs increasing. So Intel is an example of this. And we're seeing, I mean, carbon is, yeah, we're not seeing major change on a global scale. And so even the ones that are currently buying offsets, even not based on future technology, they're currently buying offsets for all of their carbon emissions. You're just not seeing that make a dent on what we actually need to do. And net zero at the moment still means lots of climate change, right, over the next 100 years. And so we really need to be at net negative by 2050 is really where we need to be at least. And so, yeah, it's an accounting trick. It is definitely, I'll just plant some trees over here and it doesn't count if I fly around the world 20 times this year. It's, you know, it's a problem. Yeah.
So there's a question from Susan. What is the situation for going out of oil or out of coal, gas, and oil, and then concentrating on petrochemical production? Do you know anything about that, Devin?
I don't. So yeah, it's outside my area. I think that when I say fossil fuel companies, I'm talking about anyone who's drilling fossil fuels. So it would, I believe, include then petrochemicals, if those are, yeah, those would be included in the divestment. But it's a little beyond my area.
Go ahead, JT.
So just a quick comment. So one, I don't know if it's been mentioned, but if you have not started to read or haven't read Bill Gates's book about climate change, I highly recommend it because it talks quite a bit about some of these things. And then secondly, I would just say, you know, what's driving coal out of business is the economics of it. Okay, as Paul kind of mentioned. And right now, unfortunately, the economics for some of the other fossil fuels like natural gas and, you know, regular petrol, you know, we're less than 1% electric cars in this country, you know, so there's got to be some push on the demand side for some of these, because that's what, you know, is really going to drive Wall Street. You know, when they see that coal companies are losing business because of the economics, they don't invest there anymore. Same thing will happen much, much more on, you know, natural gas companies, et cetera. So that's the hard part. And hopefully there's some good regulations that I've seen in, you know, what Biden's proposing in this infrastructure bill that will have a good impact on some of that. But.
Yeah, that's the really interesting thing to me about demand, is that it can so often be manufactured by regulations. And I think, you know, that is certainly the case in the United States, that we've been car centric and oil centric, and our laws and subsidies and tax breaks reflect that. I think that that's why regulation to me is the epitome of what we need to do as a movement, is because that can create the kind of systemic change that will make oil and gas less economically viable.
Thanks, Devin. Any other questions or comments for Devin before we move on to talking more about the para bill?
This is Judy, and I just wanted to say it just seemed like a lot of hokum what they're doing. Really, really does. And you know, we this isn't business as usual. We're on the edge of a precipice, and these people are acting like we're not. And I think Biden gets it. And I think regulation is essential to move people who are just shim-shams. Really kind of sad, but and it's hard to know how to talk to people if they don't get it. If they don't get it, that we're in an existential threat for the lack of survival of civilization. If they don't get it, how do you talk to them?
So I'm thinking I'll go ahead as the fire alarm's going off in my house right now. My
What are
husband
you
must
cooking, Deb?
dinner. I'll go ahead and share. I also hopefully, well, let me ask you. I mean, I have a couple of slides that I share about our fossil-free para work and the arguments that we use with stakeholders and legislators and para as well about why we think this is so important. Are folks up for a couple more slides, or are we kind of slide it out? Because I know
Slides.
slides, a couple slides. Go ahead,
As
Rebecca.
long as your house isn't burning down, we're for a couple of more
Yeah,
shots.
check your house. Check your
No,
house. Make sure you're
no,
okay.
It's good. I heard it go off, and I heard the
Is that
everything.
smoke behind you?
That's dinner.
Exactly, that's dinner. So yeah, I'll share my screen in just a moment, and we'll talk about what's happening. We'll kind of like go a little more focused into the oil and gas industry and what's happening there, and why the case for this is mounting and it's so compelling. But before I jump in, I just want to say, just in case anybody has to leave before the hour, that we have a huge action opportunity right now. So I'm hoping everybody on this call will be inspired to email the House Finance Committee with some written support of the para bill. So we really need legislators to hear why we all care so much about this, why they should be looking at this. So I just want to make that plug. I sent an email out via our 350 Colorado list this morning. So all of the details of how to do it are in your inbox. However, Giselle is going to share, we have a written testimony toolkit that she put together, and Giselle, at some point, maybe now you could put that in the chat in case anybody did have to leave. So everything you need is in there. And we just invite you to submit comments via email and or via the General Assembly written testimony portal, which is all in the toolkit that Giselle will share. Okay, I'm going to share my screen.
And I just dropped that written testimony toolkit in the chat. And if we have time at the end, I can share my screen and walk through it. It's pretty much everything you need to know about how to submit written testimony is there. But,
yeah, thanks, Giselle. And I just can't underscore enough how important it is. Like this week and next week is our moment to really elevate the issue. So everyone who can, please do. Okay, let me get on the right page here. Okay, can everybody see my screen?
Yeah.
Okay. Oh wait, and now I'm sharing it instead of presenting it. Sorry. Okay. So when we're looking at our state pension fund, we are highlighting this issue that, you know, fossil fuels will become unburnable in the wake of technological advancements in renewable energy, coupled with these global commitments to curb climate change. So we are asking over and over again, is para meeting its fiduciary duty and addressing climate related financial risk to the extent that we think they should be? So these are some of the key questions that we're asking para and legislators and stakeholders. So I don't think I need to say much about this, but as I think you all would agree, of course, we have the ethical and the moral concerns, and that is, you know, front and center for 350 Colorado. However, I was quite surprised when I started doing this work that the fiduciary concerns, the financial concerns, are enormous, and every year the argument in favor of fossil fuel divestment gets stronger. So I just wanted to highlight that we have such a strong case now for why this money should be moved beyond the moral case, because unfortunately the moral case hasn't been enough to get the money to move. So some of the things that we think we need to do are transition from a fossil fuel-based economy to a clean, renewable energy economy, as I know we're all on the same page there. We want to address climate change at the structural and financial level, which is why we're running this kind of a divestment campaign. And then also follow the lead of forward-thinking institutional investors. And as Devin was saying, we do have those people. Like, this is happening. And with pension funds, there are over 145 pension funds who have made this move to divest. But unfortunately, only a couple here in the United States, in California, they just made the decision to divest from coal, and then New York City and New York State. So it's slower here in the U.S., but we're advocating for Colorado to follow this forward-thinking trend. So I'm not going to say too much more about this, but we're always talking about climate-related financial crisis as it relates to this carbon bubble and what's going to happen when we can't burn these fossil fuel. I mean, hopefully we'll get there. We can't burn them. But in terms of what's going to happen to the financial markets, we're going to have all of these stranded assets. And the estimates range from $304 billion to $100 trillion. We're talking about an enormous amount of money that is going to be, quote, stranded when we get to this moment where, as people in the financial world talk about, when the carbon bubble bursts. And so stranded assets are assets that have suffered from unanticipated or premature write-downs, devaluations, or conversion to liabilities. So in the energy sector, we are talking about fossil fuel reserves, which will have to be written down. So just a couple, and this kind of, piggybacks on what Devin was talking about. These conversations are happening at the very highest levels. This is from late 2019, but I thought this was really significant that the IMF identified climate change as a key risk to the long-term health of the world's economy. There's this issue of corporate debt, and then I already mentioned the stranded assets. So fossil fuels are a dying industry, as we all know. And so here are just a couple of the things that are happening. The profits are dropping, the cash flow's down, the debt loads are rising, the growth opportunities are limited, the investment risks are mounting. There's significant litigation risk. This is becoming more and more of a problem every year. The last I looked, there were some like 600 or 700 lawsuits just in the US alone suing fossil fuel companies because of neglect as it relates to climate change and climate risk. So that is something that I think will only continue to mount as we move forward. And I'm not going to go too into this, but it just, again, just, the evidence about, how these companies are doing, they are, they're all being, they're on downgrade watch as the green energy movement grows. And Devin already talked about what's happening with BlackRock. I won't go further there. And then there's also what's happening with the cost of energy. So as you can see here, coal and natural gas are far more expensive than wind and solar. So, yeah, I don't know when we're going to make this shift, because it makes so much economic sense now, but I like to share this too. Okay, I know there are a lot of words on here, and I won't go through everything, but the bankruptcies are soaring, the cumulative debt is soaring. This was in 2020, it was almost $300 billion. And this fourth bullet point here is really interesting, and I think it's something that we can all underscore when we're having these conversations, is that, well, let me back up a minute. One of the main reasons that here in Colorado, labor unions in particular are against pension fund divestment, or at least reticent to fully support it, is because the oil and gas workers are saying, oh, this is going to contribute to us losing our jobs. And actually, it's happening regardless of fossil fuel divestment or not. I think the oil and gas industry would like everyone to believe that it's our fault, when it actually has nothing to do with our divestment movement. But the oil and gas jobs are disappearing even without a transition to renewables. So there was an article in the New Republic just this week showing that the number of workers required per project will soon fall 20 to 30%. And that's just from tech innovations in the industry. I mean, and the industry is looking for ways to cut costs because they're in such a bad place. So I just really like to underscore that when I'm having these conversations. And then the other thing about BlackRock is that they just released a report that shows that those who have divested have profited. So they're doing better. Those who have divested from fossil fuels are now definitively doing better than those who have not. So like Devin was saying, I mean, hopefully BlackRock is going to see this writing on the wall and be making this shift, and then it's going to tip the whole system. I hope. But this is really big too. This report just came out in the last couple of weeks. And this is kind of just saying the same thing, that the fossil free holdings have been outperforming identical indexes. And this data is from a couple of years ago. So we've known this, but now we're getting it validated by a place like BlackRock. And let's see, I'm not going to say too much more because I want to make sure we have time to talk more about the bill and ways we can take action and go over any questions. But this is definitely a global trend. I'll just say really quickly, I think you all, or most of you will have heard, we commissioned a study showing that Para has lost almost $2 billion by not divesting. So that's something that we highlight when we're talking to Para and legislators as well. This is definitely a global movement. Yeah, and I already mentioned how many pension funds, and the total amount divested to date is almost $15 trillion now. And it's true, as Devin was talking about, that's, you know, one small piece in the whole global market, but it has grown exponentially and very quickly. And this is my last slide, but New York State made the move to divest from fossil fuels. I think it was just in December. And that was a huge piece of news for the movement. So I wanted to put the Fossil Free Para website here in case anybody wants to go there. There's all kinds of information about our campaign here in Colorado. And I'm going to stop sharing my screen so that we can have some discussion and talk further about the bill and ways to take action. So yeah, I guess let me just pause and see if anyone has any questions, and then we can go over the specifics about ways you can support the legislation. Yeah, go ahead, Paul.
Hi. In the Colorado legislature, what is the political landscape in terms of, are all the Democrats behind this and Republicans against it, or?
Yeah, unfortunately, I think we do have Democrats on the House Finance Committee who are supportive, but not enough to, at least as we can tell right now, not enough to actually pass this out of committee. So I think the situation is looking better than a couple of years ago. So we ran a bill calling for a study. It was a study bill in 2019. And I think there was only one Democrat on the committee who was like all in. I think we're going to have a handful this time. So there's some progress. But unfortunately, without the labor support, it's really hard for legislators to vote yes for this. And so that's kind of, I see that as a big sticking point right now. And the oil and gas industry is convincing everybody that this is just going to be terrible for the economy and the local economy. And then Para it also hates this, and they're saying that it's going to cost them $22 million to make these changes, and that they're already doing everything that they can. You know, that's kind of their thing. And they're also saying they don't, you know, well, it's interesting because on one hand, they're saying we don't want the legislator telling us what to do with our investment decisions. But on the other hand, Para passed a divestment policy saying that they will not make any divestment decisions unless told to do so by the legislature.
Oh.
They kind of like put themselves in this position, and everybody, I mean, even the legislators are like, we don't think we should be messing with Para. And then we have to say to them, but you see, Para said you have to mess with them or else they're never going to do anything about this. So we're kind of stuck, if that helps, Paul, just to clarify a little.
Who governs Para? How do you
Um,
get to be one of those people?
Yeah, so there's a board of trustees, and they have open board seats a couple of times a year. So you can certainly get on the board, and the board is the body that has typically made those decisions. But in this case, they are just totally wiping their hands of the issue, and have a firm stance that they don't think divestment is a good financial move. They want to keep.
That could change with different board members.
Yes, indeed.
Are they elected by the para members?
That I actually don't know. I know the governor has nominated some people to be on the board, and then there are elections, but I'm not quite sure what the process is. Maybe Devin, do you know? I saw you raising your hand.
Yeah, it's a combination. Some of them are appointees and some of them there have to be, I think they're like the teachers vote for a teacher. I can't remember exactly how it's divided up, but there are elections from para members, which we should probably pay attention to and let folks know how to vote.
Yeah. Yeah, so I hope that answered your question, Paul, about what we're looking at here. I do want to say that in New York State, it took 5 years of introducing legislation before the change happened. That's kind of my template that I'm looking at. And then same in California, they were introducing legislation year after year after year before things moved. So I think we're kind of still early in this, in this pressure of a system that doesn't want to move. Yeah. Any other questions?
But you know who to work on, or know who to sick our lobbyist on.
You mean at the legislature?
At the legislature, yeah.
Yeah, I mean, really, like all the Democrats in the House Finance Committee, that's where I've been focusing right now, and our lobbyists too. Yeah, I think that's a good place to start. And I will actually, Giselle, are the email addresses of the House Finance Committee members in the toolkit, or should I paste those in the chat?
Those are not in the toolkit, so you should paste those in the chat.
Yeah, so
and it also looks like,
oh yeah, go ahead.
I was just going to say Judy has a question.
Yeah,
okay,
thank you. I'm wondering what people can answer to the assertion that Para has already lost almost $2 billion in the value of its portfolio by not divesting. I mean, to me, that is right up there in terms of fiduciary malfeasance in a sense. So how does anybody answer that?
Well, Para answers it by saying it was a flawed study, just to give you a sense of what we're working with here. So that's how they answered it. And then also, we did get quite a bit of press at the time that we released that report. And Director Ron Baker, his statement was something along the lines of, activists are, kind of turning it into, this is not a political issue. Activists are, turning this into a political issue, that kind of argument, if that makes sense.
Mm-hmm. Is there any way that you can factually refute the allegation that it was a flawed study? I mean, if it's not a flawed study, what do you say to it in terms of these people are screwing their own resource base?
Right. I mean, I think all the things that we've been talking about tonight is just keep reiterating all of the arguments and the mounting evidence.
But I'm talking about the study itself. Is there any way to say X, Y, and Z, this is not a flawed study, this is statistically sound, whatever.
Yeah. And certainly, Judy, if you were interested, I can, or if anyone's interested, we have a report that the corporate knights who conducted the study put together, and it goes through all of the methodology. So I think that's what we have been doing, is saying, look for yourself. The numbers are all here. They outline how they did this analysis. Basically they looked at, it's pretty straightforward. They looked at the performance of the fund in real time over 10 years with fossil fuels. And then they did another alternate scenario where they took out the fossil fuel companies to see you know, how the fund would have been performing without them, and compared those numbers. And then they also ran a kind of hypothetical scenario where they had more money invested into like places like Amazon or Home Depot, or, you know, and kind of looked at different scenarios. And the scenarios without fossil fuels were generating more money.
Well, I would think that maybe the Knights people or whatever, anybody who does those reports could be able to refute the allegations that it was just not accurate. No.
Absolutely. And a couple of years ago, that was kind of like the war in the media, because we had the corporate Knights people, you know, defending what they were doing.
I see. Yeah. Okay. And it also seems to me like the labor problem is a real problem in getting Democratic votes. And I'm wondering if Biden's infrastructure bill that is supposed to be denting that, you know, so the money is, some of it is supposed to go towards remediating people's job losses. And if there was something maybe that our state could do on similar lines, maybe that would be a way to address their concerns.
Yeah.
Because they're real concerns. I mean, they have to be, obviously they have to be addressed.
Yeah, thank you, Judy. We're definitely continuing to meet with the labor groups, and then also working on the just transition issue is, I think, a big part of this too. Just like being a continued advocate for a just transition away from fossil fuels, so that we're looking at the jobs. And I feel, you know, we're already doing that in with coal in this state, and hopefully we'll be doing more with all fossil fuel jobs. I know the state is looking at that too.
Mm.
Well, I know we only have a couple more minutes, so I'm going to pass it to Giselle. I'm going to put a couple things in the chat too, but I just want to make a plug for submitting the testimony, and Giselle will go over how. And also, if you're inspired and able, letters to the editor are really helpful these couple of weeks too. And we have a toolkit. We have like a really simple toolkit. I'm going to put that in the chat too, if anybody's inspired to help out with that. Thanks, everybody, and I'll hand it to you, Giselle.
Awesome. So I'm just going to share my screen super quickly, just to show you guys what the Para Divestment Bill Written Testimony Toolkit looks like. I linked that in the chat. So it gives a little bit of background about what the bill is. So it's going to receive a formal hearing in the Finance Committee on Monday, April 19th at 1:30 p.m. And it is so important that as many members of the public as possible submit written testimony in favor of this bill. Particularly, they're interested to hear from para members. So if you're a para member, extra incentive, but honestly, anyone submitting any testimony is incredibly helpful because they use this, they have to read the testimonies prior to making their decision on how to vote. So it does help. We offer a recommended structure here for written testimony. It's really very short, very quick to write, maximum 1,500 characters, which is like a paragraph, basically. It's very short. And the deadline to submit written testimony is April 18th at 1:30 p.m., so 24 hours before the bill hearing. And we give a structure about generally how to format your written testimony. Really, they encourage speaking from your personal experience and your personal story. So if you're a para member, say that outright, but then there's lots of different ways to craft a narrative. You could say, as a para member, I'm concerned about the financial risk of fossil fuel companies in my retirement portfolio. You can say, you know, I'm a community member that's directly impacted by the fossil fuel companies that para is invested in. As the mother of a child who will inherit the planet, that will see the impacts of climate change, or as an expert in finance, etc. There's a million ways that you can craft your narrative and speak from your personal experience on this. And then the toolkit also gives instructions on how to submit written testimony. So we give you the link right here, and then all of the instructions, and walk you through exactly how to find the bill, how to submit your written testimony, and then some additional resources on the para bill. So in the chat, I also linked our fact sheet and FAQ document that has a lot of information, frequently asked questions, a lot of the different incentives on why this is such a good bill, We also have the parabill official text. So really everything that you would need to submit written testimony is in this toolkit. And I'm going to stop sharing my screen there. And just want to express a whole lot of gratitude to all of you for spending your evening with us and for being engaged in this issue and for taking action on this issue. I'm really excited to see how this movement grows, and it's all thanks to you.
Thank you guys for your work.
Yeah, thanks everybody. I just wanted to say really quickly that, so there are two ways to do written testimony, either emailing the House committee members, and I put the emails in the chat, or doing it this way that Giselle has written in the toolkit. And we actually need both. So just pick one, whatever is easiest and feels best to you. But we need both. We've heard that some committee members don't ever look in the folders where people are submitting testimony. So it's better to get an email. So that's why, just, I didn't want anyone to be confused. That's why we're asking.
Should we do both?
If you can, if you have the time, yes. But if you don't, just pick one. Yeah.
Okay, thank you.
Well,
multiple choice.
Right. I want to, it's the hour. So for those who have to hop off, please feel free to go. And a couple of us will stay on just in case folks had other questions or wanted to talk further about any of this. But thanks everyone for joining.
Thank you guys for putting together a wonderful presentation.
Thanks.
Yeah.
Good night.
Good night.
Thanks, Deb and Giselle.
Deb, I've got a thought.
Yeah.
So I do a lot of, financial work, and then I also work with an investment firm that's got over $40 billion invested, and they moved all their investments out of fossil fuels, not because of moral issues, but purely because they thought that they were going to be future bad investments. And the para members, that is their number one obligation, is the return on those investments for the people that are in those funds, because it's the retirement funds, the whole thing. So, while, we're all very committed from a climate perspective, they're going to be driven more around if there's a lot more pressure from an investment return standpoint. So, I would think about, okay, how can we, if they don't pass this, how can we put together something where we start to track, okay, as of, May 1st, 2021, what are the investment returns that you're having versus what would they be if you, had alternative investments? So kind of taking some of the studies that you had and keep advancing them. And that will put more pressure on them because, their teacher representatives, et cetera, if they're seeing that, their returns are better outside of the fossil fuels, because as you had in your general considerations, that business is starting to die, that will put a ton of pressure on them, combined with the moral pressure around the climate issues, that will help drive more change.
Thanks, JT. That's a great idea. And that gives us something to consider for post legislative session. Like I've been thinking, like, what are we going to do after this moment? And I really like that. If there's some way we can be, month to month or quarter to quarter or whatever, kind of try to offer some analyses. And I know Devin has been looking at the most recent SEC filings and like how their investments have shifted over the last couple of years. So I think that's a really good idea. We could keep doing that and try to think of ways that where we could be illustrating this point.
Yeah, if you get it out in the press on a quarterly, semi-annual basis, all of a sudden you're going to be catching people's attention. Wow, our returns would have been, 80 basis points higher this quarter if we would have invested this way. And that would, over the terms of this fund, that would be worth this amount of money. That catches people's attentions.
Thanks for that idea, JT. I feel like we need Micah, maybe we need to contract one of our financial analysts that help our campaign to help with those numbers. We should keep that in mind.
I think a chart with a couple of lines on it is very convincing. If you can say, here's where you would have been and here's where you are because of these bad investments.
Right. Yeah, and that's what we were trying to do with the corporate night study. I mean, they dismissed it just so yeah, just so outright, which is just really unfortunate. But it's still, it still served the purpose of getting it out there, and California did a study at the same time, so we had a lot to work with. But I think we got to keep those numbers coming. Yeah, good point.
Because if you keep it going, California did this and then Colorado did this, you're going to put that much more pressure on every other state.
Yeah.
Once you get that landslide going, it's going to be hard for those, if I'm on a board of South Dakota and then all these other states are divesting because the investment returns are so much better, my fiduciary, as you said, the fiduciary responsibility is going to blow away the climate change issue, because there's personal risk if they're the fiduciary of the firm type of thing. So.
Yeah. And I know there are a number of places around the country who are looking at lawsuits too, because especially for the campaigns who've been methodically presenting arguments for years and tracking all the communications and the lack of responsiveness. We've been advised by the Center for International Environmental Law that we actually have a legal case. So that's another thing that I think is going to be happening here in the next year, where I'm not sure which states it will be, but I think there will be some lawsuits. So that will again continue to force attention, because otherwise I think it's like the status quo remains so powerful. It's going to take a lot of things coming together, I think, to make this move. But I think there will be. I think you're right. We need a couple more pension funds to be making this move, and then I think we'll see the U.S. get in line with the rest of what's happening in the rest of the world.
I think what JT said it's really powerful if you can compare para to pension funds in other states and they're comparing their returns.
Yeah, thanks, Paul. I agree. Giselle, let's make sure we make a note of that for our next.
Yeah, I mean, that puts direct pressure, fiduciary pressure on that board. What are my returns?
Yeah.
And then, they've got to answer to the teachers and the firefighters and everybody else. And if their returns aren't there.
Yeah. Yeah, go ahead. Oh, Jim, did you want to say something? And okay.
Yes, I put it in the chat. There's an article today on Common Dreams where some study from Yale said there's this huge implicit subsidy plus a direct subsidy to fossil fuel, that it's 582 billion per year. And it's like maybe it's a smaller amount that's direct subsidy, but if you start looking at the impacts on human health, transportation infrastructure, and climate, it's averaging 568 billion a year with a high point of 582. Anyway, so I don't know if you can make an argument to the legislature saying, if we keep giving hundreds of billions of dollars to fossil fuel while these companies are sometimes even failing or defrauding our teacher funds by getting us to invest in frack. Anyway, if it's a corrupting influence, it's hard to have a responsive government, or even for economists to believe in some sort of whatever it's called, elastic prices. You don't have that in oil. It's all fixed. So anyway, thanks.
Yeah, thanks, Jim. And I know there are campaigns solely focused on trying to stop those subsidies, because yeah, I mean, if we could do that too, that's another prong of what needs to happen, because that, the companies are only existing because they're heavily subsidized. So yeah, thanks for bringing that up. It's a whole other systemic tangle that we're in right now.
Well, they're subsidized, and then they're also not paying any penalty or tax or anything for the impact that burning all these fossil fuels has on, the economy, the climate, people's health. That cost is all absorbed in other places.
Yeah, the articles seem to say that they're implicit and explicit subsidies. So the ones to climate and the environment and human health are maybe implicit, and the explicit ones, I couldn't quite understand all of it, but it might be just like, when we allow them to not pay taxes, or the oil depletion allowance, or write off costs more quickly than a company usually can. But that some of that stuff that Biden is talking about, where an oil company will have all of its profits occur in some island in the Mediterranean or off England, and for all their sales in the US, they'll have no profit because they have to pay a lot to their subsidiary in the Caribbean. So they avoid all taxes in the US. I'm exaggerating slightly, but they do something called transfer pricing, I think.
I think those subsidy calculations sometimes also include social cost of carbon, and basically the lack of carbon taxation as part of that, as part of a subsidy.
Yeah, I just was reading what was in Common Dreams today but that's what they seem to be saying. The implicit ones are, the larger ones are the health and climate change ones, and then the more direct ones are just where they don't pay taxes or something like that. Or they get a subsidy, they get to write off their costs quickly or something.
Well, we all have to just keep doing what we're doing, and yeah, I mean the whole system is propping this up. It's yeah. Thanks everybody for the time and the thoughtfulness on this. Are there any other questions or closing thoughts? And Devin, you too, do you have anything else you wanted to add from your perspective? Okay.
No, I was just wondering how the fire at your house is going.
Right. I think it's calmed down there. Everything's quiet.
Oh.
Well, thank you all. Thanks so much for being with us tonight, especially on a lovely spring day. And thanks for supporting the this bill. Hopefully you all will take 5 minutes and do that. But I think we're good. If there are no other thoughts, we'll go ahead and close.
Okay.
Everyone.
Wait, yeah.
Oh yeah. Oh, go ahead, Ron.
I just wanted to put in a plug for next month. Amy Allen and I are working on the electrification coast to coast presentation. And since we're going to talk about the DSM bill, I actually invited Rep. Burnett and Senator Hansen, thinking that one or the other might accept. They both accepted, and we're talking about trying to invite some Boulder City Council members as well. So this time next month.
So what's the date and time for next month?
May 13th. Let me just double check that. Yep.
May 13th, 6 p.m.
May 13th, 6 p.m. Thanks, Deb.
It's not on my calendar. Okay, great. Thanks, everybody.
Thanks, everyone.
Thank you.
Bye.